Hello and welcome to my video about the fund policy versus the depot account here in Germany. So if you're interested in getting to know what for possibilities there are in Germany to invest into ETFs and what for concepts there are, then this video is for you. One disclaimer up front, this video will be a lot about numbers, etc. So if you're more looking for a short summary, then this video maybe is not the right fit for you. If you're looking for more deep insights into the different possibilities how to invest into ETFs and the different concepts, then of course this video is the go-to solution for you. So I keep it simple. We have a little agenda for today. So this is of course most about explaining first, of course, the basics of long-term savings. So we're comparing a fund policy, so a layer 3 investment into old age provisions in Germany with a normal depot account, because that is normally the most common question that we get from our consultations. And of course, we have to clarify a few things up front to not mix up the things for what for objective these possibilities are. So therefore, basically, the long-term investing is, of course, the first thing. We also have to keep in mind the inflation rate in this kind of investments, because we're talking about like time horizons of, let's say, 20, 30, 40 years. Therefore, of course, also inflation plays a role in this. We have, of course, the main issue as an older society here in our German society, so that we also cover in a short frame. Now we're talking about what is an ETF as an engine. Normally, if you're looking at that video, you should be already familiar with the kind of situation, how an ETF is working. What is it exactly? We're using, of course, then some kind of average MSCI World here for the calculations, because we want to explore more like the pros and cons of each concept and not mixing up the things with the performances. Of course, if you're looking for a good consultation, then normally you can also receive an outperformance compared to the MSCI World. We also have different solutions for that, but this is not the topic of today's video. So today we're really comparing just the concepts itself, and therefore we have also the costs and taxes later on covered. So let's take a deep dive into, and let's go. First of all, we have to cover like, what are we talking here exactly? Yeah, so if we're talking about these kind of investments, we're normally talking about a long-term horizon of minimum 15, 20, 25 years. So we want to cover the old age provisions here in Germany. Why is old age provisions here in Germany so important? Because you cannot really count on the statutory pension system. Why this is the case? We have something called demographischer Wandel here in Germany. That means that when these kind of systems like the German pension, etc., have been implemented, that was in the 1870s. So from Otto von Bismarck, he was inventing these kind of things, and in that kind of age, we had a demographic pyramid that was looking like pretty much like a pyramid, yeah. So we had a lot of young people paying for a few older people. Yeah, and this works, of course, the same way like in the health insurance and in the pension schemes. And this is how this has been invented from Otto von Bismarck. And of course, that works pretty fine if you have a lot of people in the young age contributing into the system and just a few people here on the upper area which are taking benefits out of the system. Now, since around 1980 or something like that, when the anti-baby pills, so this kind of prevention method was launched here, of course, we had the situation that less babies were born, and because of that development, we have now some kind of a form that looks like this kind of Urne, how we call it in Germany. So we have a lot of people in the older area. Yeah, the medicine has been developed pretty well, so therefore the people are getting older and older, and the people are getting less new babies, and therefore we have less young people contributing into the systems and more people taking money out of these systems. Like mentioned, same with pension insurance, same with health insurance, because also in the health insurance, a lot of old people are causing a lot of costs, of course. So this is not, of course, an offense against older people or whatever. So it's just the statistics. Older people are costing more in the health insurance compared to younger people. I think that's pretty clear. And also in the pension insurance, it is pretty obvious. You can only take out money out of the pension insurance in Germany if you're older than 67 or something like that, depending on your age. Of course, not can take out any kind of benefits if you're younger, of course, except now if you're not able to work, etc. But this is not the topic of today's video. So of course, that is the main problem that we have in Germany, because you can now see if you have less young people paying into the system and more old people taking money out of the system, then of course the benefits are being decreased or the contributions have to be increased. So only these two variables we have. Of course, now the current government decided to fix the benefits at the end so that the pension level is fixed. And of course, then the only leverage, the only variable you have is the contribution upfront. And you're already paying right now 18.9% into the public pension system. So half paid by you, half paid by the employer. But of course, that's a lot of money. What do you get for that? If we calculate here the example of a 33 years old person that has contributed into the pension system since the age of 28 with a current income of around 80,000 euros. So we are having taken here some kind of average of our customer base. So we have a lot of IT software guys here in our client base. So therefore, maybe this number is not applicable for you, but maybe yes. So therefore, of course, this is some kind of a general introduction. Of course, we cannot give a general answer to an individual problem. So if you'd like to get to know these numbers for you individually, then of course, let me know. We can, of course, hop into a conversation. What is looking like the situation here? So we have a goal of around 5,000 euros in today's value net, what we want to cover. Of course, we have an inflation rate. You know that by yourself. This is pretty strangely increased in the last year. So we have normally an average of 2.6% in the last 60 years. We can here calculate, of course, with 2.5%, or 3%. That is normally the goal of the European Central Bank is 2%. So let's take it with a conservative or a good inflation rate. The higher the inflation rate, the higher, of course, the problem gets. But let's make it this way. So if you'd like to cover 5,000 euros of today's value in a pension age, then you can, of course, take a look what is the real number that you need to achieve in your retirement. So because of inflation, 5,000 euros of today becomes roughly 10,000 euros in the value of later age. So therefore, if you're calculating right now for yourself how much you'd like to save to achieve a certain pension, then please keep that in mind that you have to nearly double the amount that you have to take out here on a monthly basis to have the same purchasing power. If we're now calculating here how much of a statutory pension you would receive, then we're coming to a very positive number of roughly 3,500 euros. If you're going to the public pension system calculator, so Rentenschätzer is it, and you're giving the numbers like what you can, for example, achieve here as a maximum rent, let's say 60 Entgeltpunkte, that would mean that you're receiving roughly 1.5 points during your lifetime. So for every year in the average area of income, so roughly 51,000 euros is it right now, you're receiving 1 Entgeltpunkt. And the higher the own income compared to this average income, the more points you get, maximum roughly 2 points. And therefore, this is the maximum that we can calculate here on the official website of the Deutsche Rentenversicherung. And therefore, here the maximum pension that you would get later in your pension age would be 2,500 euros. Please consider this is a gross pension. So you still have to pay taxes and health contributions to that. In our calculator, we have here considered an increase by the pension of roughly 1%. And therefore, also here, we have roughly exactly the same pension like this calculator here. So the roughly 2,500 euros with a expected increase by 1%. That is also normally the number that you're having on your retirement scheme or retirement information every year after you have reached 60 months of contributions. Of course, we have also here like the car insurance, health insurance, and the taxes. So net, we have around 2,800 euros as a really pension from the government as a amount as an income. Of course, now if we combine or if we calculate we want to have the same purchasing power like before, we have to achieve a pension of roughly 10,000 euros. So we have a gap of roughly 7,000 euros that we have to close. Of course, now the question is how we can solve that or how we can cover that. If we calculate that with a performance rate, etc., we need roughly 440 euros per month to save enough capital to later be able to cover this gap. We come to that later in a minute, like how this is exactly looking like, what you can do exactly. But this is roughly the amount for a 33 years old person to cover a gap up to 5,000 euros net salary. And we have now different possibilities to invest into those kind of savings plans. So this is, of course, first the problem that we have a gap. We have that because of older society, because of that demographic change, etc. So therefore, the problem is for every person here exactly the same. It's just the question, when do you tackle this problem? Because, of course, the sooner you tackle this problem, the easier it gets. If you defer that issue, for example, for the 3 years, then you need to minimum invest around 583 euros, so 140 euros a month more per for achieving exactly the same goal. Yeah, if you defer that kind of issue for about 5 years, then you're having around 703 that you have to invest, so around 260 euros more than right now. So of course, the sooner the better. And let's take a look what we have for possibilities. In these long-term savings, we have generally the situation that the ETF here is exactly the same. So we like introduced here initially, we are talking about the MSCI World, let's say 9% performance rate. So this is always the same basement. We have the same engine that we can use here, and we put different constructs around this kind of engine. We have here first, of course, the Rürup-Rente. So this Basisrente is it called in Germany as well. This is normally pretty comparable with a pension, with a public pension, because we can deduct that from the taxable income. You have some tax savings on that, but we have a high inflexibility. Yeah, you can really only cash it out as an annuity for life. You cannot withdraw anything until you retire, and also when you retire, you can really only take it out as a pension, not as a lump sum or whatever. So therefore, it is a very specific product. If you'd like to have a top up on your pension and really count that as a pension, then this is a good product, normally in combination with a more flexible product. But for the most of the client cases, it's maybe not the right fit, because a lot of our clients are putting attention to a very flexible solution. They can also take out money in the duration or whatever. So therefore, this is a very specific product, not in every case recommended. So therefore, we don't take a look here right now. What we compare here is the so-called fund policy, which is the layer 3 of old age provisions. Rürup-Rente is layer 1, and also the public pension is layer 1. Yeah, but we're focusing here on the fund policy, so layer 3 of old age provisions. What is the pro part about it? We have some kind of tax savings in terms of we're not having to pay any taxes in the meantime. So like we defer the taxes until we really withdraw the money in a normal depot account, because the flexibility is comparable, I would say. We have in the depot account, of course, the disadvantage that if you're switching the funds, if you're taking out some money, if you get a dividend, for example, a payout, then you have directly the 26.375% tax rate on the capital gains. Of course, if you're paying church tax as well, then of course this is higher. But this is exactly what we don't have in the fund policy. So you don't pay any kind of taxes in between. You also don't pay the so-called Vorabpauschale. Yeah, this is something you pay in a normal depot account. So therefore, we have a lot of deferrals here. And because we don't pay this kind of taxes, well, of course, the compound interest effect is much higher. So it doesn't make a difference here in, let's say, 5 or 10 years time frame. And it also doesn't matter if it's like volume, for example, of roughly 40, 50K. This is only really making a difference if it comes to like 4, 5, 600,000 euros later on. But of course, these are the numbers that we are talking about if we really want to build up some kind of old age provision, because then you cannot calculate with around 40,000 euros. So that doesn't help you at all. Great. So this is mainly the basics here. Why we choose ETFs, of course, that is also a widely question. Normally, you're already familiar with ETF investments. Otherwise, we also have some kind of other videos shortly available on our channel where we explain how this works. But of course, stocks as an asset class are in the long run, from the statistics, the asset class where we have the most performance rates or the highest performance rates. But why are we talking here about long term? You can see here some kind of a diagram. What was the average good case scenario or bad case scenario and average in a different time horizon? If we take a look to ETFs in a 1-year time frame, then of course, worst case, we have made a minus of 42%. Best case, we have made a plus of 39%. In average, we made a plus of 7.6%. If we take a look to an ETF investments on a longer time frame, so here around 10, 15 years, then you can see that the worst case scenario becomes positive. So in the worst case scenario, we still made a profit of roughly 1.2% per year. In the best case scenario, we made an average of 14.5% per year, and an average in all the cases of 7.4%. So and therefore, this is exactly why we invest into stocks, ETFs, because an ETF in the long run, with these duration, what we're talking about here, like 20, 30 years, it's a no-brainer that this asset class is the go-to solution, and therefore we have no risk in the market if we're investing into these kind of longer horizons. So therefore, this is just a little introduction. If you're thinking about time of more than 10, 15 years, then you can comfortably get into ETFs, stocks, etc., because then, of course, this might give you the highest benefits. So let's deep dive into the different concepts here as a comparison between costs and taxes. We can see here a diagram in the duration of your life. I would say the yellow line is a normal depot account. The blue line is a layer 3 investment product here, in this case from the Continentale, because Continentale is our preferred choice for these products because they have a very low fee compared to other providers. We can also hop into this kind of comparison here in a minute. But therefore, this is normally our go-to solution. I can also explain why, etc. What is here first? We have, of course, the basics. We have calculated with 500 euros as a monthly investment. We have calculated with 9% as a performance rate. Of course, these kind of Fahrpauschale, Basiszinssatz, etc. These are all the current numbers. What we have calculated with the depot here, we have, of course, spread costs in the normal. If you think about Trade Republic or Scalable Capital, of course, you normally have some kind of spread costs of roughly 1% when you're entering the market. Of course, they are showing you that it's for free, but of course, you have some kind of a gap in the spread. We also have this payment for order flow as a percentage rate here with a very conservative 0.1%. Normally, they are charging like 0.5 or even more. The TER, so the total expense ratio of the funds itself, we took here completely out of the picture because also in the comparison, we have left it out in the Continentale. So we are here after the expense ratios of the funds. So we're really comparing the product type itself, depending on spread costs and payment for order flow. Of course, that is also something in the discussion right now. So payment for order flow was now, prohibited from the European Union. So therefore, this is of course something that we have to take a look how that develops in the future, how Trade Republic or Scalable Capital are handling that kind of types of investments. And later, of course, if you're selling an ETF in MSCI World, whatever, you have a Teilfreistellung, so an exempted amount of roughly 30%. We're having first in, first out principle, and that is mostly the numbers on the different ETF investments, so the MSCI World investment here. So let's take a look then to the comparison. We have here during the lifetime, you can pretty clearly see that in the short run, so up to around 10, 15 years, the yellow line is definitely the better one. So the volume, of course, is higher. That is mainly because of the cost structure. We have in these layer 3 investment products, we have the full cost for the full duration balanced the first 5 years. And that is why you normally don't make any profits in the first 5 years with these products. We have indeed also, because of the last 5 years have been pretty good in the market, we also have customer examples where they have developed in a very good way. They are already in the profit even without being over these 5 years on top. So therefore, the performance of the funds was very, very good in the past 5 years, where we have already achieved a positive outcome here for them. But of course, that is not the normal case. So therefore, we don't calculate with them. And therefore, we also have just 9%. Why is it now that the blue line is here overtaking the yellow line? You're completely right. It's because of taxes. We consider, or the most of our clients are considering these 0.1% higher fees or whatever as a decision to go for the one product or for the other. But what is not coming into consideration is how much taxes you later pay or on the way. So the costs are pretty easy to compare because it's a fixed amount. Taxes normally are also a pretty easy thing to compare because it's also a fixed rate. But of course, it's dependent on also the volume, the duration, etc. So the balance between profit and invested amount by itself. So therefore, a little bit harder to compare. And that is maybe the reason behind why people are still choosing the depot for a long run, because we have a lot of clients who are saying, okay, I save the ETF, the MSCI World as an annuity for life, as a pension. But if you see the numbers here, then I can promise you it doesn't make sense. If you're saving the MSCI World for a short-term goal, like let's say 5 to 10 years to have a little asset growth up to around 100,000 euros, then this is a good solution for it. But if you're really willing to make some kind of old age provisions with the ETF savings plan, then this is not the right fit. I'm also explaining why here in a minute. Because this example shows here right now what would be the net volume after cashing out as a lump sum. And of course, in the lump sum amount here in the Continentale, you would have around 74,000 euros more at hand compared to a normal depot account. But of course, it doesn't make sense to cash out everything as a lump sum in retirement because, of course, you have to then decide what to do with the money. You have to invest it maybe somewhere else. You have to lay it on your cash account. It doesn't make sense to cash it out as a lump sum because you're paying a lot of taxes as well. So therefore, what do? You normally pay it out as an annuity for life or as a so-called Entnahmeplan. And with these layer 3 investments, you can do that in a pretty good way because we can defer the real pension age until, let's say, 85, and we can only make withdrawals, for example, out of that product before or not getting into the real pension age. And that's what the endowment plan is making. We're making here the calculation that we're keeping the capital at a constant level. So we're not touching our capital. We're just taking out the profits here out of that kind of amounts or accounts. And of course, then you can see here what you can take out net out of each account. We have a different taxation. Like mentioned, the profits on the depot account on the MSCI World are taxed with 26.375% on the profits. If we take a look here to the exact calculations, then we can see in the normal depot account, we have a profit balance. So a portion of the profit of roughly 82.8%. We have a Teilfreistellung, so exempted amount of roughly 30%, and therefore we have an Abgeltungssteuer of 26.375. So here rounded up to 38%. So therefore on the complete capital, we have around 15.3% as a tax rate, and we already paid around 25,000 euros in for Abpauschale during the time. Yeah. In the fund policy, we have a little higher amount of profit because we have not paid any kind of Abpauschale, so these 25,000 euros have not been paid, and therefore, of course, the profit is higher, the component interest effect is higher, etc. You know that how that works. We have here in the fund policy a very good feature that is after 12 years of saving and after the age of 62, when you take out some money, then you're only paying taxes on half the capital gains, but then your personal tax rate. We also have a Teilfreistellung, so an exemption of 15%. And if we calculate here with a normal average pension here of the numbers earlier, etc., you have roughly a personal tax rate of roughly 23%. And therefore, if we combine everything together, then we have a tax rate of 8.3%. And that is mostly the comparison. And of course, this is a pretty high difference if we talk about high numbers. And this results in a net pension of roughly 4,800 euros on the depot account and roughly 7,000 euros in the layer 3 investment. So and therefore, this is of course giving a clear picture of which product to choose if you're thinking about old age provision. So it doesn't make sense to look for ETF investments, even though they have initially lower costs. Yeah, they are having higher taxes later. So therefore, you don't have to only put attention to the cost, but also to the taxes to pay later. Because it doesn't make sense to just take a look to the costs, to say, okay, I'm saving here a lot of costs because, just wanted to save some costs. Yeah, taking a look to the cost, that is exactly, of course, an important feature. But here I can also show you how this is constructed or, calculated. In the layer 3 investments, we have. You can see that here, the Abschlusskosten, so the big amount of costs in the first 5 years. And we also have like these gamma costs, what you see, or beta costs. Yeah, so these kind of administration fees with the Continentale, they are decreasing over the time and are, that's a very good feature about the Continentale. They are, dependent on the invested amount that you're investing and not on the capital you have. Yeah, we are also having providers which are capital based in the cost, and of course that is increasing then by the time. The more you have in the accounts, the more you pay. Of course, here we should take attention to a provider which has only investment based costs. Yeah, in the depot account, of course, you have here with the spreads, etc., or here mostly because of the I think it's the payment for order flow. Let me quickly check here. No, the spread cost is it's the payment for order flow. So the 0.1% that is here really growing at the end, because if we're having €1 million inside that account, the payment for order flow costs are then pretty high compared to the overall cost. So therefore, in the complete portfolio over the complete term, you will be higher in the costs. Of course, in the first few years, you're definitely better because in the first few years, these products do not have so much cost in it. The Continentale or the other providers like the layer 3 investments have. So therefore, short term, definitely the better choice for a normal depot account. Long term, definitely the better choice for these layer 3 investments. Yeah. Okay. Now we have made this pretty clear how this is looking like, because that is especially the most cases that we have in comparing. Of course, we would never recommend to put everything into the long picture here or into the long-term strategies because it doesn't make sense. Yeah, we need some kind of an old age provision to cover the gap later in your old age, and of course we can use that for asset management or asset growth here in the long run. But what you can clearly see here is that a depot account doesn't make sense to use as an annuity for life. What we have not covered yet is, of course, a fund switch. So if you make a switching here in the depot itself, so let's say you make, let's say, 1 or 2 different switches after 11 years each. Yeah, so you're restructuring the portfolio. And of course, you have an impact on the taxes in the normal depot account. Yeah, you're directly realizing the profits and you're directly making a difference here because in the fund policy, that investments is still available. Yeah, and of course, this we didn't consider it yet. Also, what we didn't consider yet is a change in the law. Yeah, we have that situation right now that the government is thinking about increasing the capital gain taxes, and of course, in a normal depot account, you're directly having that as an impact. So if the government decided, okay, we are putting the 26.375% to, let's say, 30 or 35%, because it's unfair that a normal depot account or normal dividends are paid with less taxes compared to employee. And of course, you have a high tax rate. And of course, that would change the picture drastically because then the tax rate here would be even higher. The big benefit here of layer 3 investments is that they are secured by law. Yeah, so it's always important when you did that contract. So we have the same situation with the life insurances before 2005. They're completely free of any capital gains or any capital gain taxes, and therefore every contract that has been made until the 1st January 2005 is completely exempted. Everything what was closed after that is having this kind of taxation what we know for today. So like this 1262 regulation, so the 50% is exempted with a personal tax rate, etc. Yeah, but this is exactly what you have here as a security. So you have a little more security in the legal terms, so you know exactly what happens in 40 years. With the depot account, you have no clue. Yeah, so if the tax rate is increased by the government, you're also paying higher taxes. If the government thinks about putting pension contributions or health contributions on top of the capital gains, then the same thing. You're paying here in the normal depot account much more than in a layer 3 investment. So therefore, we have a lot of pros and cons of each product. Of course, here, if you really think about long-term old age provisions, then I would really tend to the layer 3 investments because of these mentioned terms. Yeah, what we have not covered, what I also wanted to put here into the consideration is the flexibility. Yeah, flexibility is of course an important part, and a lot of people are saying or thinking that an old age provision plan is not really flexible. That is not the case. You can also withdraw money here at any time from these schemes. Yeah, it's then the same taxable situation like in a normal depot account. So you also have the normal capital gain taxes. So the situation would be the same, but you have, of course, then in the meantime, maybe made more compound interest effect, etc. But mainly it should be a combination of both. Yeah, you should have some kind of a short-term account like a normal depot account or our asset management strategies, and you should have some kind of a long-term account like this. And you can here also make withdrawals if necessary, and if the short-term account is not sufficient here for that. So if there's really something unforeseeable. Also, you have the flexibility to change any kind of investments. Yeah, if you're saying, or if you're starting with 500 euros as an investment, of course, you can also increase, decrease, or whatever with the investment. So you can, of course, decide by yourself how you'd like to structure that, how you'd like to invest that, etc. So this flexibility is also given. Also, this is a payout worldwide. So if you're later in retirement age, you're living not in Germany anymore. We also have a lot of clients. That's why we do these videos in English language. So then if you're not sure where you live later on, then of course, this is also a worldwide flexible plan. So wherever you live, this is paid out worldwide. So, and therefore, yeah, from the flexibility and from the numbers here, you have a lot of tax benefits. So as a little summary, we got to know that if you do some kind of old age provisions, yeah, if you're really thinking about making this kind of plan for securing your life later on, then of course, it's normally recommended to go for a layer 3 investment plan or old age provision plan in Germany. That can be the Continentale, that can be any kind of other provider. We also have some kind of a comparison here of the main parts like Nürnberger, Continentale, Allianz, and Stuttgarter. Have here the Nürnberger. This is the only provider which is a little bit cheaper than the Continentale in terms of cost. So it's really slightly, yeah, we're really comparing here like roughly, yeah, what is that? 10, 11,000 euros compared to a volume of around 3.2 million euros. The advantages here slightly. The disadvantages is that we have a very limited fund choice. So the funds or the ETFs that we can pick is very limited here with Nürnberger. So it's mainly like the usual ETFs like MSCI World, S&P 500. Normally with the Continental, we have some kind of a portfolio. This is which is generating in the last 9 years, has made some performance rates of 16.67% per year. Therefore, we can normally be a little bit more flexible in the ETF structuring or in the portfolio itself with the Continental. The second part that we don't like about the Nürnberger is they have only Rentengarantiezeit. So this means that if you're going into the pension age, then if something happens to you, the remaining capital is only paid out as an annuity for life to your spouse or to your kids. That is not the case with the Continental. So there we have some kind of a cashback of the complete amount, so a Beitragsrückerstattung or a Kapitalerstattung. So therefore you have everything what was there when you went into the pension age minus what you have already received. The remaining amount is paid out to your spouses, to your family, to your kids as a direct lump sum payment. Therefore, this is for us a little bit more in a flexibility way. So therefore, we like to have that a little bit more like this. And this is normally it's up to you what you like. So if that's comfortable for you, you can also go with the Nürnberger. And if you only want to invest into the MSCI World, that's totally fine. We like to build more like a portfolio where we can also get more than 9%. That's why we go with the Continentale. The other ones are normally having too much capital-based costs, and that is exactly what we can also see with Alliance or Stuttgarter. We have a little more capital-based costs, and therefore you can see that here exactly. There you have really a bunch of money later on that you're paying because the capital is increasing. Of course, if you have €1 million in that account, of course, then the capital-based costs are a lot heavier than the other costs. And therefore, this is exactly what we can see here. So from the cost perspective, so Nürnberger has some capital-based costs here in the complete picture. It's a little cheaper in this regards, or from the Ablaufleistung, because then you have to pay less taxes, etc. Okay, that as a little summary. So of course, I hope you liked the video. Of course, that was a very detailed version, very detailed in terms of numbers, but this is exactly the intention of this video. So this is not to give some kind of a brief introduction about what is good, what is not good. So this should be some kind of a very deep dive into the different pros and cons of a fund policy versus a depot account. So like a Trade Republic or Scalable Capital account. Therefore, I hope this was helpful. If of course that was too fast, you can review that video at any time. If you would like to get an individual consultation in regards to your own situation, then of course you can book a meeting with me via the link below in the description. That is of course always a possibility. We offer free consultations here. Sorry, that was a phone call. Yeah, so we are offering here free consultations. Therefore, you can always book an appointment with me. That is absolutely no problem. That one can take an individual consultation or individual picture, or look into your situation and check here what is the right balance between them two. What is good, what is not good, what is in your situation the best option. Of course, I would be happy to help. This said, I'm looking forward to meeting you soon, and yeah, take care.